Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 5th of November. So we find ourselves in another non-farm payroll week. We've got flattening markets, but we have seen a little bit of action last night, which has broken a couple of key levels that probably surprised me prior to non-farm payroll. So look, we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, as we always do. The daily chart is an interesting one. Look, as of last night, it was still trying to hover around this 20 moving average, but the price action from the US session has certainly pushed it down. Now, it's well and truly nothing short of a miracle is going to reverse this now, and you can see that we've got a big, long red candle that is breaking down that 20 moving average. Although it has found a little bit of support around this level here, which is the highs of this little period here, the 50 moving average is probably not going to hold it. I wouldn't have thought. Generally speaking, I would think that when we're in the middle of a little mini channel like this, it's probably going to gravitate down to that 73 sort of 30 area. So look, watch with interest. It's hard to jump in now, obviously, because it's sitting right on the support, even though I don't expect it's going to hold. What you need to be doing now is going to the smaller time frames and looking for a bit of a pullback. A little bit of a pullback down to the 20 moving average would do the job. 4 hour, a little bit the same. I think this was great trading, this especially the fall from here. Once that rejected up there, pulled back to that reversal zone and touched the 20 moving average, that was very, very happy days for the short on the Aussie. So really, that's what you're looking for now. Another attempt at the 20 moving average. Doesn't have to go all the way up there, but somewhere around this level here. That would be probably a pullback that would be deep enough for me. If it came back up to that 74.25 area, that would probably coincide. Hopefully the moving average would have caught up by then. But even if it doesn't, that is a bit of a roll reversal zone. It continues the lightning bolt effect down. And I think our main target here is the 73.30. So not bad trading on it at all. Like I said, the 50 is right in its face now, but I think we've got the histogram on the daily falling as well. Stochastic doesn't look like it's finished its job. So this should be, the level that it's going to probably get to. Failing that, if we get a bit of a reversal here on the 50 moving average and we start to see the opposite, and that opposite will be obviously a change of trend on a smaller time frame. So if we see some higher highs and higher lows starting to form on the 1 hour or the 4 hour, then we're going to be basically aiming for the 200 again. So, but it needs, for that to happen, it's going to have to break this level again. So it's going to have to get itself above this 74.50 area. And then and only then would I be looking to take it long again up to the previous highs of, around this 200 moving average, and then maybe further onto the 75.80. That is looking less likely. That's not the easy trade. The easier trade is definitely to go shorter from here down to that 73.30. So look for the signs. Basically a pullback to the 20 moving average, and the lightning bolt effect will continue the show on the way down. And failing that, a break up above here would get us going long again. But definitely our preferred trade is to the short side. Okay, we'll move over to the US dollar CAD. This one's doing the job that I was hoping it was going to do. It was definitely around the bottom. You could see on the 4 hour that was really trying to turn around here. It's very, very round. Now it's starting to push up. We're finally starting to get a bit of a flow-on effect. It needs to break this level here to really convince me, but I think it's well and truly on its way. So you can see the 1 hour here has broken these two key levels here. So you got two key levels that were struggling to get through. It has broken them. Now it's testing them from the top. Very shallow test, mind you, but it's still trying. And probably just as importantly though, the daily is getting up above that 20 moving average. Last night it was hovering below it, but now that it has pushed up, if we get a close around here, it's going to be very, very bullish for it. It has got a little bit of trouble, right in its face, but I think if it can get through that and get through these moving averages in the next day or so, the 125.80 is the real target for this one. I think it can do it. It's got good momentum coming out of a very flat zone. MACD is definitely in its favor. We can see the histogram rising, signal lines out of the MACD. So pretty happy days really for the CAD. I think that we like what we see. All we need to do is see the continuation now. So basically a 4 hour close above this level here would be quite good, and this is a very clear target that we're going for. Our stop losses only have to be just behind the last swing, so it doesn't have to be too extravagant. You just need to be able to make sure that the last swing is protecting you from a fall down. So not bad trading at all on the CAD. I do like what I see here, and I think that it's starting to get out of that little rut that it's been promising to do for definitely the last couple of weeks. So very good. Okay, the US dollar yen is the next one. I drew this triangle pennant type arrangement yesterday because I felt that obviously it's hovering inside it, and there is not much white noise inside this triangle. As you can see, price action is basically covering up the whole triangle, which is really good. If you go out to a weekly chart, this is why I actually drew it up predominantly. It does look like a pennant pattern, like a flag pennant type pattern on a weekly chart, which is a very, very significant time frame. I don't need to tell you that. You all know this. But you can see that it's broken out of a consolidation zone, big giant flag run up, and now it's pennanting inside that area there. This is a weekly chart, so a very, very serious chart, okay? So when you draw the pennant, it's obviously at the previous highs at around that 114 to 114.50. So very, very significant zone for a pennant to be forming. So when you go down to the daily, you can see that it does make a little bit more sense. And then you go down to the 4 hour, of course, and you can see the trading has been well and truly inside these two bands. So realistically, we know what this is. This is pent up momentum about to break either side. The ideal break would be to the upside here. I think there's a lot of potential to go up. If it does go from here, I mean, this is potentially looking to a 118, 119 breakout. If it matches up for the pattern on the weekly, you're talking about, the best part of 300 or 400 pips. So a very serious trade. Now, it's going to have to do it, of course. My problem for it is that the pennant is right at the very strong resistance zone, which was previous resistance on a weekly, as you can see. That does trouble me. I would prefer that the pennant didn't have so much resistance at the top of it. But in saying that, it makes the pattern all the more stronger if it does break through. So it's one of those ones that you have to watch. But if it does happen to break through this level, it's going to have a really, really nice and potentially significant move up. Okay, so good trading on the yen, but a little bit of watching and seeing at the moment. If you really, really want to trade it, you got to go to the 1 hour and trade inside the pennant bands until it effectively breaks out. So you can see it's respected the pennant all the way down, trade the higher high, higher low sequences into those zones, and that's how you can scalp that one. All right, we'll go to the dollar index now. So the dollar index is really trying to break higher. It's had a good move up. Only in last night's period. There you can see it reached 94.40. The 94.50 is the real hit zone. If it gets and closes above the 94.50, we know we are on the dollar index. Okay, so there's very, very big potential to move up. You can see we've got an extraordinary amount of support and resistance at this point. It's a very difficult area for it to break. So this is why it's taking so long. But we've got the 50-20 moving average cross. We're really happy with that. If it gets past this level, it's going to be a bonanza for the move up. I think it's got so much potential to go up significantly, and that's going to have a really, really big flow-on effect to a lot of the pairs that we've been talking about today, and of course the ones we've been talking about over the last few weeks. So we are barracking for the long here because I think it makes a lot more sense from a technical standpoint. It's the easier trade, and it's the one that makes a lot of sense for a lot of the good pairs. So and it's doing its job. It is trying very hard to get above there. So yes, it's finding itself in a consolidation zone now because obviously non-farm payroll is only, 15, 16 hours away. We know this week is quiet, even though we've had a few, reasonable moves. It's been a pretty quiet week, really. Like the markets haven't really gone to any extreme. So this is no different. We're going to wait around here, see if it can break that 94.50. If it does that, really, really good trading on the way up for a lot of the other pairs, and also obviously the short on the euro, which we're going to have a look at. Failing that though, the downside looks a lot tougher. Like for me, it's got to get back below the 93.50 area before I start considering this as a short again. It's got a lot of work to do before it does that. So this is why I like this trade more. But if it does it, of course, and we get a series of lower highs and lower lows and it breaks down past this level, then we look at it again from a very different lens. But for now, it looks mainly strong, and we're going to look for that breakout on the way up. Okay, we'll go over to the Euro USD. So obviously the support here is the same as the resistance on the dollar index. It's really getting pressured from above. The moving averages are pushing down on it. Both the 50 and the 20 are forcing price down into this support zone. It's really going to come down to whether the dam walls are going to break or not. Like if the dam wall breaks at that 115.40 area, then it's going to spell doom, short-term doom for the euro, because you'd think 150 pips is nearly a formality for it if we get that close below it. It's being resilient. It's certainly trying to hold up, but I think this is just more of a consequence of where we're at ahead of non-farm payroll. I think if the numbers are favourable to a short euro, you're going to see pretty big drop in this one, and you'll hopefully get the break that we've been waiting for to actually start to get this down. So the 20's been definitely a stumbling block forward. You can't get past it on the way up, but it is starting to squeeze down and put pressure on this level. So whether it turns around or not, there are two ways you're going to play this one now. Like if we get a daily close below the 115.40, which may well happen tonight, then we start looking for the shorting opportunities down. We need to go out a fair bit to actually see that, of course, but you can see the areas that we're really targeting at that point there are around the 113.30 to 113.50 area. This is why I'm really happy and excited about this short, because realistically, the zones are fairly free-flowing all the way down once we get a break of that level. And you can see on a weekly here, you know, the 20 and the 50 have crossed. It's a significant cross, and the MACD is looking very, very strong. So there's certainly plenty of room for it to move down. This is why, in a sense, this is a better trade. But the opposite of that, of course, is if we get a change of trend on the daily. Now, because this is such a significant area, I wouldn't be taking a 4-hour change of trend here. I would only be taking a daily change of trend. So we need to be seeing a series of higher highs and higher lows on the daily chart. If we do that, then I'll be convinced that potentially she's going to go long again. And then we're going to start looking at breaking this area here and trading back up to there. But of course, that means a 93 or below dollar index. And there's a lot of work to do for that. That's maybe a couple of weeks of preparation to actually even get a higher low sequence on a daily. So certainly not the preferred trade, because that's going to take too long to get in. So what we really want to see is a breakdown of this level, and then we try to trade it down. But of course, keep an eye out. I mean, it can go both ways, and we definitely change on a whim if we need to. We're going to do what the technical analysis says we're going to do. So we'll keep an eye on it. A break of this level, and we start to short it down to the 114.50, then 113.50, and a change of trend on a daily, which we'd be talking about basically next week. If that was the case, we certainly wouldn't be getting that prior to next Friday. That is a different story, but this one could happen in a day. So this is the one we're really watching. All right, the last one we'll have a look at is we'll go to the ASX 200 actually, because this is proving to be a little bit interesting now. Look, it isn't really rising in the same manner as the S&P 500 and the Nasdaq, of course. They're just going to the moon. Nothing seems to be pulling them up at the moment, albeit on volume that's probably a little bit sketchy. But at the same time, it's still going up without any pullback, so we've got to respect that. But this is probably the one that's lagged behind a little bit. Now, it's resources that are dragging this down a little bit. We know we've got BHP and Rio sort of stumbling. Banks aren't really shooting through the roof. So a lot of what makes up the ASX 200 index are not really performing as well as a lot of the other bigger stocks in the rest of the world. So that's what's keeping this one down. Even though it is trying to move up with the world indices, it's struggling to get past these zones. Now, they're three very, very big rejection candles. Like, make no mistake, they're two fully fledged hammers. Both of them have pulled up to the 20 and the 50 moving average. It's proving to be a very, very strong level here to hold up for it. Where it goes, though, to go longer, it needs to break this level, and it's not going to do that until the resources and banks pick up. Simple as that. We are going into dividend season as well. We're going to have some significant dividends being paid in November, which is actually going to put pressure on the index. Of course, when the stocks fall with their dividend price, it brings down a lot of the majors in the ASX 200, which of course puts pressure on the indices. So realistically, it's a hard road for it. But if we do get a break above that 74.60 area, then we can start targeting the 75.50 again, which is the previous highs. If it gets up there, that's not a bad trade. I mean, it's still the best part of 110 points away. So you can certainly get some good trading in there. So that's what we're looking at for a break at this level. Very difficult to trade until it actually breaks this level. The short is another story, of course. The short is definitely a potential as well. I think either way on this one, you're not going to go too far wrong if the technicals give us a signal either side. I don't think I've got a real huge bias either way. I'm happy to trade both of them. The 4-hour looks like it's got a little bit more to do than the for a short standpoint than the long. You can see we're already starting to. It's trying so hard to make a new higher high. It's stuck at this level here. We've got to get past this level first. If we can get past that 74 sort of 60 to 70 area and close above it on a 4-hour, that will be significant for it. And then I think we can start looking for the longs back into the 75.50 to 7600. Failing that though, of course, a change of trend around this level. If we see 4 hours trading below the moving averages again, and we see a very small change of trend and a lower high, lower low sequence, we'll start aiming for these lows again, which is around that 73 level. And that's probably what's going to catch it up. So you've got about 100 to 150 points either side. Just wait for the change of trend to kick in, and then you'll be able to trade this one. So I hope everyone's had a great week's trading. It's probably going to be a little bit slow today because of non-farms, but then the action should probably start once that comes out, and early next week we should start to see some of these trends continue again. So have a great weekend, everyone, and I look forward to seeing you all next week.